All right, good morning. Welcome to Market Chat. It is Wednesday, time for our weekly review of what's happening in the markets. For those of you that are watching this for the first time, we're going to be here 20 minutes, probably less. No need to elaborate on things that have been in the market for a long time, and some weeks like this one, there's not a whole lot of new news that's out there. But the reason that we're here is to provide some clarity and hopefully simplify your marketing by looking at what the charts are telling us, reconciling that with what the news flow is, and then ultimately coming up with a plan based on what the charts are telling us. And when we do that, we can spend a lot less time worrying about it, fretting about it, and we tend to maximize our time more efficiently. So what's happened this week is not a whole lot, to be honest. I think the biggest news of the week is that the coronavirus headlines are fewer than they were last week. The headlines seem to be subsiding. The effects of the virus seem to be diminishing, and it's not over, but it seems to be slowing. There's a lot of cases that are out there, but there's also a lot of treatments that are being tried. The Chinese ministry is all saying, basically, to summarize it, they're saying, yes, it's going to hurt our economic output, but it's not going to devastate it, and it's not going to be um, uh, nearly as prolific as some people may think. The big news in agriculture for the week, honestly, is that there is uh, a USDA outlook report coming out tomorrow where they're going to tell us how many acres we're going to plant. And we've been talking about this for months that we're going to plant a bunch of them. Everything that didn't get planted last year is going to get planted this year. And so we're looking for corn to be 94 to 95 million acres and beans to be 85 to 87 million acres. That's an awful lot of production. And in weather, there's a lot of talk of flooding in the eastern Corn Belt and definitely saturated soils. So we'll see what happens there. I want to revisit this slide because I want everyone's attention should be on this range of corn that could be coming this year. The big number is that if we do plant 95 million acres and they yield trendline yield, we're looking at potentially a 16 to 17 billion bushel corn crop. And if we grow that much corn, it's going to be difficult to raise prices significantly. So if you read all the headlines and digest what all the different talking heads are really saying, it's that corn's upside is limited unless we have a weather problem and we have a significant buying interest from China that's not currently priced in the market. If we get those two things, then we could actually lower our carryout. But short of both of those happening, our carryout's either going to stay the same or grow for yet another year. And if we do grow our carryout and it starts to push that 2.5 to 3 billion bushel, then we're going to set a new low end of our range, which is probably going to be sub 325, potentially even sub 3 if we're not careful. So I'm not trying to sound the bearish horns or anything else, but if you read all of the people, there is a lot of talk about much higher prices, and there's a lot of talk about China's demand is going to solve everything. And that's not quite accurate if you think that if we do grow a 17 billion bushel crop. China's not going to buy that much corn if uh, if especially if South America comes in with another harvest. So you got big crops in South America, you got big crops everywhere, and so you just have a lot of supply that's out there. And the big problem with this industry is that we try to cure supply problems with more supply, and we do it year after year after year. And so that makes it very difficult to uh, get higher prices. The last component to that is our policies tend to encourage more supply, right? Um, we got into a weather scare last year, and what did the USDA do? They changed their policies in order to induce guys to plant more, saying The more you plant, the more government money we get. Well, and now we're just oversupplied again. So the issue is constantly trying to cure supply problems with more supply. And until we break that cycle, the up top end of these ranges is limited. Now, the point of all of this, and I've been hammering on this for a while, is that the range in corn should increase, not decrease. We've been in a tight range for a while. We should see it expand because the range between high supply with no buying and no ethanol demand, and new buying, fixed ethanol, and maybe a supply problem, that warrants some sort of volatility and some sort of weather premium eventually to be put in this market. So you've got a wide range depending on what this carryout is, but don't convince yourself that there is no downside risk in corn, because I promise you that if our carryout exceeds 3 billion or even comes close to it, we are not going to hold 390 corn prices. So, all right, that's my bearish rant for the day. Let's take a look at what the charts are telling us, because they're not as bearish as I just laid out to be. Start with soybeans this morning. Soybeans are off their lows. We've seen a little bit of reversal action the last couple days. This morning, when I started getting ready for this presentation here this morning at 4:30, beans were flat and a little higher. As we've traded through the day here, we've started to sell that off. So it's going to be interesting to see what happens as the day session picks off, but certainly overnight, we took out yesterday's low and that increased some selling. We'll see what happens. This move here looks and feels on the shorter term time frames to be more corrective than starting a new leg down. I could be dead wrong on that, because you can read this both ways. You know, you're below your cloud, you're below where you were 26 days ago. Your fast line is below your slow line, and you're starting to take out prior day's lows. None of that is overly bullish. The only thing that's bullish about this bean chart at the moment is that we're holding above this significant low here, and we're in a seasonality and a seasonal time of year when you would typically get some uplift in prices. So beans can go either direction here. I'm not bearish, but you can't ignore that chart setup. So the close today and tomorrow is really, really important. And it's really important that we hold this 880 to 885 range and not start closing below it. So below that, beans have probably got some problems. All right. Wheat, lot of activity in the wheat market yesterday. Last Tuesday night, during the night session on Monday, somebody stepped in and bought 4,000 contracts of wheat just at the market and just popped that thing up heavily. Nobody knows who that was or why they did it, but somebody came in and bought a huge amount of wheat and increased their bullish bets. So the funds have increased their bullish bets through this decline here and are now in Kansas City, they're at a nice long position. In Chicago, they're over 50,000 contracts long and approaching a record. So you've got a lot of buying interest in the wheat market, and you've got open interest in increasing. As those two things happen, a lot of times news will come to light that justifies that move, because maybe they know something we don't. All I can tell you is that we've been talking about this for a while. We've had this nice move up in wheat. This was a counter trend pullback, and now it looks like we're starting the next leg higher. We exploded up out of our cloud. We've held this trend line from the December lows, and it looks like that's a nice impulsive move. And this morning's action doesn't mean anything technically. You know, we're below yesterday's high. We haven't made a new high, so there's no reversal action. It's just a little bit of breathing in the midst of this big up move that we had. So wheat here is poised to make a challenge of these highs and even potentially move on up and expand this range up into a higher range, potentially all the way back up into these highs that were set last summer. So now what's happening fundamentally that could warrant that? You've got Australia's crop getting smaller. You've got less than perfect conditions in the Midwest, and you've got the dollar, which could be in a peaking phase. So the dollar has been rallying very, very hard and could be in a peaking phase. There's a lot of talk about what would happen there. So if you get some bearish pressure in the dollar, that would be bullish to wheat. And if China steps in and buys wheat, then you could end up with higher prices. So not a whole lot of stuff to do in wheat today other than be patient, sit and watch it. And I think the most reasonable guess here is that this high is going to get challenged and taken out, and that high is going to be challenged. And maybe we'll reverse there, maybe we won't. We'll just have to watch it and see what happens when it gets there. All right, corn. I know this is everybody's favorite topic. Where are we? We've been tracing this massive wedge for, gosh, how many days is this? This is October, November, December, January, and February. That's a long time to be in a tight trading range, and we just continue to trade towards the end of this wedge. Yesterday we did break the top of it. This morning we're trading back down below it. So we've been talking for weeks about breaking out of this wedge, and we can either go straight up out of it, or we could have some false breaks one direction or the other. But the reading holds. If we break the top of this wedge, it counts 47 cents or 42 cents from wherever the point is that you break it. So if it were to break and were to hold some closes above it, then it could start a rally. If you reverse and break lower, then that could accelerate to the downside, and we could go test the bottom side of our range and maybe even set a new low prior to planting. We expect this move to be significant whichever direction it goes, which is why when we talk positions, what we're doing is talking and setting spreads, because this is neutral. We don't know what direction it's going to go, but we expect corn to move, and we expect that to be influential to beans and to wheat. So all three of these grains should have increasing volatility as we get into the planting season. And I don't want to sway anybody's bias, because we've laid the foundation for why this range can go either direction. I think the best way to trade this is to assume that each breakout is the break, and just accept that you may take that it may break and reverse and get you back out of it. That's why we're trading spreads with long puts, long futures, because we can just exit the futures as we break back down and hold our puts. It's going to minimize that whipsaw action and put us in a position whichever way it ends up breaking. Last chart we're going to look at here is the corn bean spread. We're trading in favor of corn, although not that much. 2, 3, 4, 2.4 is neutral. 2.34, maybe that's a few acres of corn. I don't know. If we break this thing and start to trade all the way down into this 2.2, 2.1 range, then that's going to start buying acres, a lot of acres from beans, and put them back into corn. Why we're doing that with a prospect of 17 billion bushel carryout, I have no idea. But to me, that's kind of a discrepancy, right? If you're afraid of 17 billion bushels, you'd think we'd be giving up corn acres, not buying them, and the market does not seem to be doing that. So market's doing its job, and it's performing, and it's doing it very efficiently. We'll just have to stay tuned and listen to what it says as it does it. So from a marketing standpoint, let's come back to here. we recommend being hedged corn, having a put position in the nearby contracts in corn makes a lot of sense. They're not that expensive. We think volatility is going to increase, and it at least sets some protection if we're going to break out lower. Soybeans, we're out for now. We may be putting some more protection on there if we don't turn around and challenge this $9 level fairly quickly. We may put a hedge back on there. And Kansas City wheat, we're just out waiting for another sell signal to put those back on. With speculators, for those of you that are interested in speculating, again, we're doing these spreads where we're long futures, long puts, and the reason for that approach is seasonality. The seasonal aspects of these grains is more bullish than bearish at the moment. So we want to be long the futures because that could be the most explosive move, but we do have downside risk because of all the other things that are happening. So long futures with stops in that will put us long puts as we move lower. Last thing before we go, I promised we'd do this every week, and I forgot it last week. I apologize that I forgot, but we want to track what our trading programs are doing. And remember, the program is where you put money in and it trades for you. You don't have to lift a finger; it just does it for you. So this is a hypothetical program, as if it had started on February 1st, and we are now in all three grains with those spreads that we're talking about: long futures, long puts, and today working a profit in wheat, small loss in beans, small gain in corn, and for a net profit. This is why fundamentally we think it's important to be actively trading, and you don't know which market's going to move. So if your intent is to take money out of the market, then trade all three because you don't know which is going to move, and the goal would be to be in them when they do. So we'll keep watching this on a weekly basis so you can see exactly what it is that we're doing. We'll be transparent with you and bring you up to speed as those positions unfold and as we get signals. That is all I have today. If you have any questions, please call us. We're here to help answer them. And I hope you have a great week. We'll talk to you later.